talking point today is a view on that specific aspect of consumption that usually does not have a sunset month, quarter, or year. United Breweries came out with numbers, and therefore it's pertinent to talk to Rishi Pardal about the company's performance as well. And from the looks of it on the revenue front, the growth was pretty strong, despite what I believe would have been a slightly tepid second half of December. Let me get him in to talk about all of this, the cost factor, the market share, and a lot more. Rishi, great having you. Thanks for joining in. Hope all is safe.
Thank you so much, Neeraj. I like the way you said that this sector has no sunset. We indeed saw the sunset in the first quarter of COVID with the combination of lockdowns, high taxation, closure of bars, etc. So we are very, very conscious of the fact that things do change. Yeah. Anyway, having said that, I think
I must say, Rishi, though, that the first instance of the lockdown opening up, the queues outside the wine stores were longer than the queues outside chemists.
Well, and that's something that, I've always been saying is that consumers have a propensity to consume. And so if there are no artificial constraints to us reaching them and servicing them, the business remains strong. It wasn't easy saying this in those months, but as things have panned out in the next 6 odd quarters, we've seen that indeed come true. So coming specifically to this quarter, you're right, volumes did reach the pre-pandemic levels and directly correlated to the fact that the lockdowns or closure of bars were relatively muted in that quarter. Our premium portfolio grew even faster. Our market shares are now trending across states at the higher end of their normative range. So all of that is good. However, we also did see the impact of higher inflation. And we made some investments in marketing spends, both to support our partners as well as to revive demand where necessary, and to launch the new visual identity system for the brand. And as a result of all of that, while volumes and value has looked pretty healthy, our margins are still not reached where we want them to be. And we do believe that's a combination of pricing, which has a lag in this industry because we have to work with all the state governments to get that, and to drive even more productivity measures than we have been so far, so that we can get that combination right and flow through the goodness of these volumes into our results.
Actually, maybe I'm mistaken. I was of the opinion that realizations by and large have trended higher. So is that the growth in the realizations needs to be a lot more than what it has been, or am I mistaken that realizations haven't trended higher?
Well, realizations have certainly trended higher. The question really is, you've also had inflation in the cost of it, right? You have oil at 90, and then there's all the attendant sort of benefits, or rather the impact of that across the value chain, be it in aluminium, be it in kraft paper, be it in barley with the MSP changing and so on and so forth. So all of these are items for us to manage. We don't have the full pricing flexibility that we would need to immediately make the corrections we need. So there is a lag. We are working with the state governments. We are doing what we can internally from a productivity standpoint, but it takes time.
I'm sure it does. Rishi, actually, okay. So first, let me just tackle the volumes and the revenue front. One, do you reckon? So would you have done better if the last 15 days of December would not have been slightly iffy? And question is, how much of that has spilled over into the month of January, while Feb and March are a bit of an unknown? Could Jan impact be felt in the Q4 numbers as well?
Well, certainly I would say that we would have done a little more, not substantially more in December, because most of December was largely unaffected, right? But when we come to January, certainly we saw a number of states had lockdowns, a number of states had night curfews, all of those things that curtail people going out to bars and restaurants. There were capacity constraints and so on and so forth, right? At the bars and restaurants, seating capacity and so on and so forth. So we will see some impact in January. Fortunately for us, these months are traditionally not the beer drinking months from our perspective, right? So the timing when all of this is now beginning to wind down is good. And provided there is no further wave, then, as we get into February, March, and April, which are really the big months for us, and May and June included, then those are, and if we get normalcy there, then I think we will be in a pretty good position, right? Last 2 years, we've had the waves actually coincide with our peak consumption season, right, down to a T. So hoping that this time around we have a normal season.
Oh yeah, I mean, yeah, that would be quite something, and then the base would be in your favor too, at least in that period. Okay, one quick question on market share as well. From what I gleaned from your numbers and the analysis, that the market shares have improved, and I think the performance across states, if I'm not wrong, almost every single state, you've done fairly well in the O&D quarter. Would you be hopeful of repeating that? Give us an analysis of Q gone by and hopes from Q4.
Yeah, I think, there have been a lot of work that the team has done. One, from a micro marketing perspective, in every state, understanding the issues that we had or the opportunities thereof, and really gone after those to make sure that we can translate that into share. Second, we've been doing a lot of work in terms of category penetration. We started last year with a beer at home campaign. We followed it up this year with the logical extension of that. So there's been a lot of work that's been happening to drive this kind of share. And I'm pleased to see that, our overall shares are trending at the upper end of our normative range. We had issues in the year gone past in markets like Telangana, in Rajasthan, in Haryana, in UP, in Odisha. All of these are now trending in the right direction. So we think that, a lot of work that has happened is yielding result, and that's pretty pleasing to see. At the same time, and as I keep telling you, Neeraj, this is a game where we are competition aware and consumer focused. The category is still underpenetrated, and we have a job to do in terms of driving that category penetration. At the same time, we want to have a premiumization share or a share in the premium segment that's reflective of our overall share. That's work in progress, and we continue to drive that. Having said that, even in the premium segment in this quarter, our growth is ahead of our overall. And therefore, if we are at pandemic levels or pre-pandemic levels in terms of overall volumes, we are even higher in terms of premium. So we think it's all trending in the right direction, but there's still a long way to go in terms of penetrating the market and making sure that the opportunity starts getting realized in line with our ambitions.
Got it. Just one quick follow-up there, Rishi. How easy or difficult is it to say whether some of the hard effort that your teams and you would be putting in order to understand all the nuances lead to a linear trending move, or is it difficult to call that, and it could well be patchy as well?
See, I think, it'll never be perfectly linear, right? The attempt is always to have it linear. It will never be perfectly linear because there are all kinds of responses that will happen, and then, there's a timing of these things and so on and so forth. But I think what we try to look at is, that's why you always look at a rolling quarter average and then try and see that trend line is in the right direction, right? So less worried about the short-term fluctuations, more, focused on ensuring that the long-term trend lines are in the right direction.
Okay. What do you do to mitigate the costs? Simply because almost every global bank that I've spoken to in the last 1 month says, we are looking at 100, maybe 110, maybe 120, what have you. And the fact that the other costs are also moving up. Commodities have moved up 6 of the 7 weeks in the last 2 months. So what do you do to mitigate these costs?
It's a real issue, Neeraj. Okay, and I think it's a combination of managing our costs, driving productivity, and using judicious price increases. Right now, as far as the price increases are concerned, we are working with the state governments because most of them we have to go through them to get some of these. As far as the costs and productivity are concerned, we did quite a lot to mitigate the impact of low volumes in the last 6 quarters. Now we have to do even more to ensure that as the volumes come back, the flow through is is in the right shape. So I think it's work in progress. There's a lot of work. Every single item of cost, every single line item, every single commodity, the productivity in our factories, all of these are items of great focus for us, and we'll continue to do that, right? I mean, this has been, I would say, not anticipated by very many people, right? The kind of bullishness we are seeing on commodities now. But I think it's a very healthy challenge for us as a business. We learned quite a lot in the last few quarters. It wasn't easy churning out, positive EBITDAs when your volumes are 20, 30, even 70% lower than prior periods, right? So we've learned a lot, hopefully, and we will use those lessons to do even more.
I'm just trying to understand, though. I know it's difficult to put out a number of any sort, so I'm not asking for one. But do you reckon ceteris paribus margins could take a further hit, if you will, or even if revenue growth is strong, margin growth and EBITDA growth could be weak?
Well, I think the way I'll put it is that you've already seen the kind of EBITDA margins that we've delivered in Q4. We will see as we go along, because the excise years really are when we will get some of the pricing. And the productivity stuff will also take some time. So there's usually a lag of a quarter or two for us to catch up with the inflation. So that's the kind of time frame we have. Having said that, the teams are all focused on it, and so we'll try and get there as soon as we can. Right?
No, sorry. So are you saying? I mean, just trying to understand that it could well happen that the peak of the cost pressure hits you at a point of time, hopefully, when the season also hits a bit of a peak this time around. Hopefully it doesn't happen like 2020 and 2021.
It depends on the forward outlook of inflation, right, and oil. And you were talking about the fact that some of the people you've been speaking to are indicating even higher prices, right? So it's something that I think inflation is here to stay at least for 4 to 6 quarters from now, and the plan is for us to catch up as fast as we can.
Got it. One final question, Rishi. Your nearest competitor keep on garnering scale, and despite the fact, I was reading a note which said that while their sales growth would have been higher, it is not that you lost market share, it's remained unscathed despite the fact that you're such a tall leader. Now my question is, I'm guessing a lot of it could also be because you guys, the organized players, are consistently gaining market share from the unorganized players, the local players, for the last many years. You reckon this can continue for the foreseeable future as well? For you, I'm not asking you to comment on your competition.
Here is the thing, right? Between the big three of the sort of beer manufacturers, the share, I mean, give or take a point or two here or there, is somewhere between 89 and 91%, right? Between the top three. So, and then some of the others, there are some very particular reasons why they do well in certain states, right? So I think the trick in this business is really to grow the pie. It's not to gain a larger share of the pie. That's why I keep telling my teams as well, you need to be competition aware. You need to ensure that we are not losing ground, but really the prosperity and future of the company is in growing the pie. And that's really where we're focused on.
Rishi, one final question before we wrap up. Something that you're looking forward to. I'm guessing one of it would be a normalized season this time around for the next couple of quarters. But beyond that, is there something else? New launches, new portfolios, newer states, newer distribution strategy, anything that you can tell us? One thing that you're looking forward to?
Yeah. So certainly the biggest thing I'm looking forward to is a normal season. It's going to be the third year now that we've had 2 impacted seasons. But having said that, I think both the penetration and the premiumization, pillars that we have a lot of excitement, built into them. When I look at premiumization, there's a whole list of, sort of products that are available now to us from the Heineken portfolio that we would like to see whether they have compelling propositions with Indian consumers and bring some of those to market, right? When you look at the penetration, it's really quite a challenge to understand the systematic barriers and triggers that there are to beer consumption and unlock those, right? So that hopefully will also take the brand in directions that will make it feel much fresher, that will be more compelling to consumers to sort of, try the brand and the category in different occasions, in different day parts. And all of that is really exciting, right? So I think as we come back to normalcy from COVID, all of these things start coming to the front of plate, and I'm really looking forward to that journey.
So slew of launches in Q4 from the Heineken portfolio, or still not decided?
Well, it's still work in progress. So, we're still work in progress, but at the appropriate time, we will launch.
Great. Well, wish you all the best for all that and more, Rishi, and thank you so much for speaking to us today.
Thank you so much, Neeraj. Look forward to seeing you later.
Likewise. And viewers, thanks for tuning in.
Bye.